Good morning. My name is Mrs. Shepherdson, and today our lesson will be on understanding income taxes as they relate to both you as a consumer and you as an agriculturalist. But first, we start with a joke. You can see this young man here, and he's a little unhappy with his report card. He just wants his dad to know that those grades are after taxes. So that gives us the gist and the idea that we're starting with today. We're going to talk a little bit about what income comes out of a paycheck and where that money goes and how much money that is. First, let's talk about federal taxes. We pay federal taxes, and those are used by the government to invest in certain things. Technology and education. They also provide goods and services for the benefit of the American people. If you look at where the biggest bulk of that money goes, it goes into three categories: Medicare, Medicaid, and Social Security. If you watch the evening news at all, you'll notice this is also what we as a country debate and perhaps argue about the most. A quick overview of these three programs. The first is Social Security. I would challenge you to do a little bit of research on your own about what's happening with Social Security right now, because it's kind of a controversial time. But this was an income security program, and the way it's set up is that today's workers pay Social Security taxes. It goes into the program, and that money flows back out as income to beneficiaries. Now, the beneficiaries are people who receive money based off how much and how long they've worked. You can't qualify for it until a certain age, but there are certain situations in which people are disabled or things like that, and they use those as income sources. The Medicare program is a federal health program for people who are over 65. It provides benefits to them similar to a health insurance. And the Medicaid program is a program providing health care coverage to Americans who meet low income eligibility requirements. You'd have to do some research on what those income levels currently are. They change a little bit with inflation and the times and the politics that are going on. When you pay federal taxes, it's actually kind of a complicated system to figure out how much you have to pay. So this is the current federal income tax brackets. This is for the taxes that would be paid for 2019 this year in 2020. Off to the left, you see a column that says tax rate. That's the percentage of your income you would pay in federal taxes. And then you have to pick which column applies to you. Do you file taxes as a single person, as a married person filing jointly, which means filing together, or a married person filing separately? And are you filing as the head of the household? All of those things change your income tax bracket just a little bit. So a quick example we could go through. Let's say I'm a single person and I make $40,000 per year. If you look in the single column, you can see that I then fall in the bracket of paying 22% of my income every year in taxes. The more income you make, the higher percentage of your income you pay in taxes. That's pretty much a common thread every year. Now, there are two ways that we pay taxes. The first and most common is that taxes are oftentimes withheld from your paycheck. So this is a situation where you don't own your own business, where you are paid by an employer. And so you'll fill out some forms when you start that determine how much tax is withheld, and then the employer pays your taxes to the government for you before you get your paycheck. And this is called withholding. The benefit is that you don't have to be disciplined and save your money to pay your taxes by the following April. But sometimes it is tricky to figure out if you paid the right amount of taxes, and you don't actually know that until you file your taxes. So we try to do our best guess, if you will, depending on what's going on in a person's life, so that they pay close to the amount of taxes they need, but don't end up giving a lot of their income to the government to be held and then paid back as a refund. Now, in some situations people do not have their place of work withhold much at all, and they prefer to just pay those taxes in a lump sum to the government on the due date, which is April 15th. That definitely is an okay way to do it. It requires a little bit more discipline, but you also have that money in your personal possession until the date that it has to be paid. So as you can see, there are benefits and challenges to either method. I would encourage you to ask the people around you, particularly the adults around you, what they think about it. You will find there are a lot of different opinions. Now, as you become an adult and start working, I want to let you know about some tax forms you might see. When you start at a professional type job where they are withholding taxes from your check, you will be given a form called a W-4, the middle one there on the screen. And this is the form you complete when you're hired, and basically you're telling your employer kind of the status of your life so that a decision can be made about how much tax to withhold. So you put down a number that denotes your marital status or how many dependents you have, meaning children that you're raising and caring for, as that costs a lot of money. There's a lot of different techniques as people fill that out. Sometimes if people are worried that they're going to owe more tax, they may claim less dependents, so they actually pay more tax throughout the year and get a refund. Sometimes people don't want to do it that way. So you will hear differing opinions as you grow into adulthood on how that should be handled. Now, at the end of the year, the accounting department or the accountant at the place you work will put the correct information in and create and send you a W-2. I believe those typically have to be mailed out to employees by the end of January, and they show the amount of taxes that have been withheld from your paycheck for the year. And this is how you file your federal and state taxes. W-2 forms are very important, so try not to lose them. A W-2 form has quite a bit of information on it, and we're going to go through that here in just a minute on a sample. But first, let's talk about a 1099 form. A 1099 is a record of money that is paid to you when you are not on the books as an employee that is having taxes withheld. A lot of times this is called contract labor. Maybe someone just hires you to irrigate for the month of May. They're not going to pay taxes for you all year long for that, so they just record how much money they pay you, and at the end of the year they file a 1099 with the IRS and with you. It's basically saying this is how much money I paid that person. You then are a contractor and you have to pay taxes on that yourself. So it's a good thing to ask when you start a job, particularly as a teenager, how they plan to handle taxes. Will they be giving you a 1099? Will they give you a W-2? The amount of money you take home is significantly different. In a 1099, you're going to have to pay taxes later for it. So that essentially decreases the amount of money you've been paid. Be careful of that, but know that it's a really common way to pay employees, particularly that don't work full-time year-round, which is oftentimes students, or employees that just work seasonally. Here's a sample W-2. I apologize that it's not the clearest, but I think you can still kind of see some important things. If you start at the top where letter B is, that's the employer identification number. That is the tax ID number of the business you're working for, then the name and address of the business. Then you have the employee's social security number. That is your identifier within the tax system. And then your name and address. If you look at the right-hand side, you can see that there's a lot of little boxes that are labeled with numbers. The first box, box 1, says wages, tips, and other compensation. So that's the total amount of money that company paid you. And then if you look right beside it, it says federal income tax withheld. That's how much of your money went towards federal income tax. In box 3, you see how much money they based your Social Security taxes off of, which was the same as before. And then right beside it in box 4, that was the amount of Social Security tax that was withheld. Finally, in box 5, you see your wages that your Medicare taxes were based off of. And then in box 6, how much tax was actually withheld. At the very bottom of the W-2 is typically where we report state taxes. So you can see in box 16, again, that was the wages that your state taxes were based off of. And then right beside it in box 17, that was the actual state income tax withheld. Each state in the U.S. determines their own taxable rate. It's usually something that is voted about, argued about, and even cussed about rather regularly. Now let's talk about this concept of working under the table. I bring this up not because I want anyone to feel bad if they've worked under the table or if they're an employer who pays under the table, but I want you to understand the differences. Sometimes someone will say to you that they want to hire you, but they want you to work under the table and they're just going to pay you cash. What this basically is unreported employment. They are not reporting it to the IRS. It sometimes is also called working off the books. It's not necessarily illegal that you do it, but according to tax law, you need to report that income at tax time, or you could be held accountable for tax evasion. An employer who pays cash under the table, if they are audited by the IRS, could be subject to pretty severe penalties. In large situations where it involves a lot of money, sometimes those penalties also come along with criminal convictions. And typically the people have to pay back all the tax money that should have been deposited, plus the interest and the fines, and do jail time. So working under the table is probably not your best scenario, but especially for teenagers, it is somewhat common. In my mind, there's a big difference between building fence for a weekend and getting paid in cash under the table, and working for an entire year and not reporting any of that income as the main wage earner in a family. So just be aware that all actions have consequences. In the Internal Revenue Service, which is the government agency that governs taxes, the way they address those things is typically through what's called an audit. And any person can be audited at any time, and you have to provide all your records of tax documentation or be given the penalties and fines according to that law. So that gives us some idea of state tax or of federal taxes. Now let's talk about state taxes. So you oftentimes, I would say almost always, are required to pay both federal and state taxes, and sometimes additionally a local tax. State taxes are used within a state to provide education, to manage and keep jails. They're used for economic development, environmental projects. They provide order in terms of state police, parks and recreation, aid to local governments, and also contributions to low-income housing to help families begin to be more successful economically. Now, state taxes are figured just a little bit different. This is just an example. If you were someone who was single filing status with $70,000 of wages in that year, then your marginal tax rate would be 4.63%, and your total income tax paid would be about $2,600. Now, the effective tax rate involves a couple other calculations depending on other deductions you may have. But basically, your marginal tax rate is the rate that you're paying taxes. Let's take another look at that W-2 to make sure you see that at the very bottom, again, we have the total income reported and then the amount of state tax paid. So you can see that typically the amount of state tax paid is substantially smaller than federal income tax paid. Now, taxes are not a foreign topic, but oftentimes we as humans don't realize how many taxes we pay as we go about society. We just talked about income taxes, but there are also times when people pay property taxes. You saw in the W-2 how we pay a payroll tax, which is also called Social Security. In stores, you pay a sales tax. I don't know if it's every state, but in Colorado, food is not taxed, like food at the grocery store, but other things are taxed. There are special taxes for things like gasoline, cigarettes. There's a liquor tax. There's actually taxes related to different estates. And that would also include things like capital gains. If you sell a property and you've gained a lot of profit from that property, there's a special tax. And then finally, taxes on different gifts and inheritances you might receive. So all of that money that is collected is put back in to better our society. Everybody has their own opinion about how well that is used, but one of our opportunities as a U.S. citizen is to vote and voice those opinions so that we can help govern the country that we live in. Here are some resources that I use to make this PowerPoint and that you can also do continued research in when you have other questions. I hope you have a great day, and I hope your grades are better after taxes than the young man we began with. Thank you. Bye.